Okay, Jobiel Karim, the research energy analyst at Ecobank Development Corporation, joins me now to take a look at these numbers and, of course, the stories behind the numbers. Good morning, Jobiel. Thank you for coming on the program. Oil prices, when once we mention oil prices, everyone shiver. Well, everyone shivers, and we're wondering, how can we cope with this, knowing fully well that Iran is preparing to pump more oil despite the fall in the price itself? Okay. An oversaturated market is already there, and we're looking at more oil being pumped into the market.
Well, I think it's quite unfortunate that there's a combination of two factors that are coming into play at the same time. We have the increase in supply that is expected from Iran, then we have the concern about China, and that has been the major driver of the decline we've experienced recently. There has been an expectation that there will be a very sharp drop in growth rate in China. And how this affects the market is because if you look at the major economies that drive energy consumption in the world, we have the United States on one hand, you have China on one hand, you have the European countries. The European countries' projection for 2016 is relatively flat. If you look at the only encouraging economy, one of the major economies, the United States, but the increase in demand there is being met domestically. Then we have China. Then the demand is expected to drop from China, and that add to the excess supply that we are already getting from the market. And in addition to that, we expect Iran to be coming into the market. We are estimating that eventually, when the full sanction is lifted and the country can access the international market, we are looking at an initial 500,000 barrels of crude oil coming into the market. The country currently produces about 3 million barrels a day. We expect them to have, we believe they have the ability in less than 1 year to ramp that up to about 4 million barrels. That's an additional 1 million barrel into the market. So it's all not looking good from both the supply and the demand side. Supply is expected to increase, demand is not going strong as well. So, and what happens when that comes into play is that price in the free market will automatically be looking for a new level.
And more worrisome is the projections that have been made by both the International Monetary Fund. The MD was actually in Nigeria last week, and she talked about the fact that oil prices may stay lower for longer. And also Goldman Sachs came out to say that we may see oil prices at about $20 per barrel. It actually fell to below $30 a few days ago, and the projection is it may fall to $20 per barrel. What kind of messages does this send into our government?
Well, one thing we should always note is not to take the projection of a single company in isolation. As of this morning, if you look at the average projection for most of the major houses, including ours, you discover that the average is about $45 a barrel.
Within what period of time?
For the 2016 period. So that from January 2016 to December, average projection is that oil will average throughout the year $45 per barrel.
What factors do you think relate to that? Because what we can see does not point to that direction.
Well, what you have to look at it is that we still have certain countries who really are not affected by the low oil price when you look at the production side of it. When you're not taking into perspective the effects of their income, reduction in income on the economy. If you are looking at production, so cost of production is low in those areas, but in certain areas, most especially in North America, the cost of production is higher. For projects that are already on stream, they will continue to produce, but new projects will not come on board in those areas. So we've already seen in 2015, EIA said rig count dropped in the US by as much as 30%. So we are already seeing all those numbers come into play again in 2016. So eventually, what happens is when price drops to a certain level, we begin to see projects that have been evaluated as not being profitable. So all that will come to play. Oil will find its new balance. But we believe that this initial downturn in the market is not just because of the increase in production that we're expecting, but also the concern about China. And once that is a bit reduced in the interim, we should be able to see some level of recovery, not to the level it was before, but some level of recovery in oil price.
You know, maybe China can help pull some weights on the oil prices, because the last manufacturing output data that we got from the country said that there was a slight recovery in the factory output. Perhaps that could lead to more recovery in the economy, and that could also make the country demand for more oil.
Yes, it's exactly what I was pointing out at the beginning, that a consuming economy, when you have a consuming economy, is an energy demanding economy. Okay. So when production grows up like that, you see that energy demand from that region also will increase. But just a general factor of the whole Chinese market is what is not looking good now. Once the production aspect of the economy begin to look much more better, then we will be able to see, we will see a much more improved outlook for China.
Now let's come back home a little bit, still talking the energy markets, where the president of the Dangote Group, Alhaji Aliko Dangote, said that the gas pipeline being built by the company will triple the country's consumption of the resources. How do you think this would impact on the gas markets in the country, knowing what oil is saying at this time?
Well, I think the gas pipeline is essentially going to supply the Dangote refinery that's been built at the Lekki Free Trade Zone. And that means that there will be a much more utilization or local utilization of gas in Nigeria. So that, then again, if we have government hand being taken off the kind of contract that will be structured between Dangote and those that are supplying the gas, I think we can that can also, in the long run, shift to the energy market in gas to power, where the government has fixed the price of gas at a level that is not very encouraging to gas producers. So I believe that whatever plays out in that space can actually influence what we are seeing in gas to power.
Can we say that perhaps we could shift to focus from oil to gas? I know that some cars run on gas as we speak, because if we're going to see improved investment, increased investment in gas production in the country, that could make availability on the rise, and perhaps affordability as well. Nigerians should be able to afford more of this gas, and being able to balance it with what oil price is saying. If you're not making enough earnings from oil, perhaps you could look at gas.
Well, energy generally, one thing you should note is that when the price of oil is going down, it's also affecting every other energy product, be it gas, be it refined product. So it's not the decline, just that crude oil is more pronounced than others, being its popularity. It's also affecting the gas market as well. Then again, if you look at Nigeria, yes, we have a lot of gas reserve. There's nothing stopping us from adding additional exploration in the gas space and production in the gas space. But what is actually delaying this, and why is a lot of investment are not going to the gas play, is because the major utilization will be gas to power, and governments continue to control that aspect. So regulation is restricting so many of the investors in putting money in it, because I cannot invest in a project,
so the government
and I cannot dictate.
Or to some extent give some room for more private players.
Yes, and the head part of that would be that the power companies have been saying is that tariff will have to go up, because once the cost of gas go up, it affects the generation company. Then the generation company price increases for generating electricity, which is then sold to the distribution company, which is then sold to me and you, and therefore price have to increase. So price have to reflect the reality of what is happening in the economy, as well as reflection of a non-government controlled gas industry.
Wow, okay. I'm sure that they're all listening, and the appropriate steps should be taken to free up the gas market and ensure that Nigerians are able to have access. Even if we have to pay more, at least let's have access. Let it be accessible by everyone.
Well, by the 1st of February, there will be an interim increase in price of electricity. From our own measurement, we still believe that the price should be higher than what has been proposed by the NERC, because if you look at it from what was agreed in there, if you look at what the economic situation that surrounded all those factors that come into the MITO 2.1 the multi-year tariff order, the projection for exchange rate, for instance, has changed. When you look at the current exchange rates environment. So all those factors, then the economic, operation area in which these companies are operating, all that need to be factored in, and we come up with, these models are flexible. You just need to tweak the inputs and come up with a new tariff, and you discover that the price of electricity is actually very low in this country.
Oh, okay. We'll keep our eyes on that and watch as developments unfold in that market. Thank you so much, Jubril Karim. He is the energy analyst, EcoBank Development Corporation. Talking about the energy market, of course, we're seeing what oil prices are saying at this time.